You're looking at the Hang Seng Tech Index and a breakdown of the movers, and most, as you can see to the downside, fairly substantial losses in some of these big names. It does feel like one of those days where you sort of keep one hand on your pocket, so to speak. JD.com, as you can see, biggest decline here, down about 11%. As sources are telling us that Walmart is looking to exit its stake in the company. Annabelle is here with us on set to talk us through what we know about this potential disposal.
That's right, yeah. So these shares could be being sold here at a discount of as much as 12% to yesterday's close. Walmart is a company we know has had this JD stake going back to 2016, but it's obviously been a very challenging period for the last several years, really, in China's market landscape. You think about just how competitive pretty much every segment is, but online, or groceries rather, are really dominated by those online players like Alibaba, PDD as well. And so Walmart is really up against that. They've really only had one key bright spot, and that's been Sam's Club that offers premium goods. It's a membership model, but its other outlets really are struggling, and it's all about trying to chase those cash-strapped developers. So now what we're hearing is that basically, Walmart is looking to exit its JD.com stake. They could be raising as much as $3.74 billion from this. Morgan Stanley is said to be the broker-dealer handling the offering, but all of this right now is based according to people familiar with the situation.
Yeah, we're watching XPeng shares as well. I mean, it seems like there was a bit of disappointment in the third quarter revenue guidance,
yes,
but also, I mean, EU tariffs and the like, too.
Yeah, it's really does come down to that guidance. So, I mean, we got the sort of the projection of how many vehicles they're looking to sell. Actually, that came in a bit higher than what Wall Street analysts had been expecting. But when you take a look at the revenue, it's not as good as what had been projected. And so it just tells you that they're not making as much money per sale of each vehicle. And that's really speaks to just that intense amount of price competition. And you were just speaking with Bill Russo in the last hour, and he was just saying pretty much that's the only way you can compete right now, is try and compete on price. That's the key weapon in what is a very aggressive auto war in China.